What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Listen, this is your Twisted Tuesday report, and we're going to talk about what the heck went on with the marketplace coming out of the holiday celebration that we had. But we're going to get into that inside the video. What I need you to do right now is hit that like, share, and subscribe button, and I need you to come along with us on the journey. Make sure you check the description tab. I got all the tools and tidbits to make you a successful trader right there at your fingertips, and all of our products and services that Traders War Room brings you on a day-to-day basis right there. So make sure you connect with us on those. Now, if that sounds good and you're ready to rock it with us, then all I got to say to you is follow me and let's go to war. And TWR has to remind the viewer that this is not financial advice. All content on this channel is for entertainment and education purposes only. You are responsible for every decision you make. Have fun, use caution, but always, 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 let's go to war. Don't forget to come check us out on our flagship, man, Traders War Room Discord. Listen, we got the real-time buy and sell alerts. We talk options, stocks, futures, crypto, forex. We got live trading, Zoom classes, one-on-one mentor, free and paid services. And man, it is truly a one-stop shop for every type of trader investor out there. Beginning to advance, it doesn't matter, man. We're a community. Come over there and take a journey with us and come check us out. The link is in the description. Guys, go check out our website, man. It is live and we're adding things every day. I just added all of the historical classes there. All you got to do is go up to the menu button, scroll down, go to classes, and then all of the historical classes are right there with little descriptions and individual links so that you can make a payment for whichever class that you want. And the link to that class will go directly to your email. So go check it out, man, and get yourself some education, especially when the market's red like this. We all need to go back to training and make ourselves sharper and better and refine our skills so that we can be more profitable in the end, definitely when we start to rebound from this and get back into the bull market. All right, team, and that's the video. Listen, remember, check out our Discord here at Traders War Room. We look at the stock market like it's a war zone, stocks and sectors. Those are our battles. We do it together as a team. Attack, conquer, and destroy, and we're doing it as a community of like-minded individuals who want to grow, learn, and share together. If that sounds good, then all I got to say to you is follow me, and let's go to war. All right, guys, I'm not going to beat this up. Anyone who's anybody that paid attention to the market knows that it was a bloody day, man. There wasn't nothing moving out there, and definitely everyone felt it. I got tons of DMs, tons of comments. Man, it was definitely the type of market that really tests people's patience and really tests people's discipline to strategies and plans. To put it in perspective, this is your heat map. Now, look at that. Red everywhere. A few little sprinkles of some green in the energy sector and a few in the healthcare, but all in all, you're looking at everything for the majority red across the board. Here's another diagram for you. Like I said, only thing popping off into the green side was energy. Everything else, technology, financials, consumer discretionary, red, red, red. Now, even in the red market, man, we did see some light at the end of the tunnel. A few stocks did better than others. We saw Neuro do some popping. We saw BBIG and ATVI, that deal with Microsoft, definitely saw some popping and locking over there. A lot of volume still, even though they didn't do very well in Ford, SPY, and Zynga. But we definitely saw red majority of the day in all of our favorite stocks that we love to trade on and off every day. Sector performance, you know, we don't look at the 1 day. We like to look at the 5 day. Energy up, consumer services barely up, info technology, right? Everything else below that, down, red on the 5 day. Futures, not looking very promising. Now, I want you guys to understand, futures are just glimpses into what could potentially be. It gives us a plan and a strategy to kind of outline how we're going to attack the market the next day. And here's where you can see some big orders coming in. Now listen, how can orders be still coming in a red market? Well, what you got to understand is a lot of times people are going off of levels. So stocks drop because of cascading effect from like trailing stops, stops, all that type of stuff, okay? And what happens is then they get down to a certain level and automatic triggers or big buys will start to come in and hopefully turning it to a rebound onto the bullish side where people are having money flow positively go into their favorite stocks. And here's some of the big trending stocks that StockTwits gives us, okay? We see that BBIG is there, SoFi, ATVI. A lot of these are ones that you should probably pay attention to, but don't fall for the fallen knife, okay? So if you start to see these things pop, be cautious when getting into any type of trade because it definitely could sell off very quickly because the outlook on the market right now is extremely bearish, and investors are not looking long term. They're looking for short term gains, and they're tucking away their money into safer investments. And we're going to talk about some safer investments later on in this particular video. Now, I wanted to do a little bit of education. I wanted you to understand what was significant about today's sell-off in relation to the NASDAQ. And we're going to talk about it because the NASDAQ closed on their 200 moving day average. And so what does that tell us historically moving forward when we're looking at the NASDAQ as kind of a pulse in the market for a lot of the speculative and technology stocks that we've grown to love recently? So we noticed that the NASDAQ notched the first close below the 200 moving average. And this is a line that investors are wondering what's going to happen to the NASDAQ now, right? So following MLK Day, you saw all the stocks just dump, which about 10% and stuff, which to most analysts is the correction term. So you hear that word a lot. We're looking for correction. We're looking for correction. Well, we're at that level. So are we going to continue to go down? Well, the outlook on that is yes. Now, will we spike up? Probably. In the near term, yeah, absolutely. We'll have some spikes and stuff, but a lot of analysts are still saying that we need more of a correction because a lot of the stocks that were bought into so heavily are riding so forward on their PE ratio, okay? So that's one of those things you need to do some research on, profits to earning ratios. You got some of these stocks that are pushing like 50, 60, 75% PE ratio, and the value investors, now that the money is going out of growth into value, they're saying these stocks are inflated and they're not worth the price that they're at currently. They need to come down, and then they'll start to be at a buy zone for future continued growth. On some other news, Tesla investors want Musk to repay $13 billion on the Solar City deal. So basically what he did is Elon coerced the company board in 2016 for a Solar City deal and asked the chief executive be ordered to pay the electric vehicle company one of the largest judgments of over $13 billion. Now, I don't know much about this, but anytime Tesla gets some negative pressure, you tend to see a sell-off because Tesla is extremely volatile. So I'm expecting Tesla to probably have some bumpy roads moving forward, especially while this is being pushed into the PR limelight. So definitely paying attention to Tesla and the other EV companies that like to ride the coattails. NIO, Lucid, even Ford and GM, since they're starting to get into the EV sector. And here's one I just put on here because it has a lot of people excited. Sony slides 9% as Microsoft gaming deal casts a shadow. So, Sony's dropping because Microsoft went out and said, we're buying Activision and stuff like that. Now, Activision was in this lawsuit because of some sort of rights or, something. I didn't read fully into it, but basically Microsoft went ahead and grabbed this, which is probably a good move for Microsoft because ATVI definitely could use a big powerhouse juggernaut to come on board with them and merge together and take this company to the next level. So I'm interested to see how this rolls for both ATVI moving forward and Microsoft. All right, here's the stuff that we're in. Now, I only put out 2 calls earlier today, and that was one for T and one for VZ. And because those looked juicy as we were closing in the power hour. And I got a lot of DMs and things of that nature, like, why are you not putting out alerts and stuff like that? Guys, man, you guys saw the market. It was red. I don't just push alerts to just push alerts, okay? If there's no position to get in to trade, remember I told you, you're always looking for 3 reasons why to get into the trade. Some sort of catalyst that the stock is moving, some sort of trend to see what type of direction is going, and some sort of PR news that gives it a positive or a negative depending on the direction you're going. So that you can get an idea of the direction of where the stock is going, man. If you don't get 3 criteria, in my opinion at least, then you need to leave it alone. And so I left the stocks alone for the most part, but going into power hour, I like some of those communication services, specifically T and Verizon. I definitely saw some potential for some short-term plays. I'm looking to sell tomorrow, but definitely a bloody day for me in the marketplace, and you guys are probably feeling the pressure as well. I know everyone out there is struggling because a lot of us are bulls at heart, and we got a lot of bull plays out there that we're not doing very well today. And I know this is probably not the best time since we had such a bloody market, but listen, if you want my bot and you want it in your server, man, send me an email, man. Let's talk business, okay? The market will not always be red, man. And listen, when we are fire, we are fire. And TWR's bot, we push out the alerts real time, real positions that we actually get in to every position we push out, man. You want us on the team, hit your boy up and we'll get to talking business. So let's talk about SPY, man. SPY dumped, okay? We're at almost the bottom, man, of the fib lines. And listen, I would not be surprised if we dip even further down, because I'm about to show you the indicators and they are looking bearish. And definitely the sentiment in the marketplace right now, and especially with Biden talking tomorrow, I'm thinking that we're probably going to dip a little bit further and we're going to have some more selling pressure. Listen, you got to use the indicators, man. Money flow pointing down, RSI pointing down. The TTM squeeze, we're down on the bottom side of it, okay? Definitely not looking good moving into tomorrow, especially looking in the SPY, which you know is NASDAQ, and is a lot of the tech strong industry, which is definitely taking a beating right now. Now going ham just on technology alone, the triple Q, man, we are at the bottom fib line, okay? And you know what? I would actually think that we're probably going to bounce from here, okay? I think there's a lot of money on the table invested in these particular industries. I think we bounce from here, but we might be headed back down after the bounce. Only time will tell, but we're at the bottom here. I think we bounce a little bit, maybe in a day or two, and then we'll test that area. And if we can't hold it, we're definitely going to continue down. And indicators are confirming that we're definitely in a downtrend. Money flow is at the bottom, where I think we'll probably bounce. RSI starting to approach that 30 level, where we'll probably be expecting a little bounce from there. The squeeze is below, the AO is below. MACD, it's all pointing to the below thing, but I think that we're probably going to curl, try to make a run back up, and if we can hold that level, great. But got a feeling with Biden talking, we won't be able to hold that level very long, so our window of opportunity may be short-lived, but definitely we should have an opportunity here in the near future, sometime this week, to make a little bit of money on some bull calls using the Qs. All right, Ford holding strong. We got a slight inside bar to the bearish side, which I think we're going to see a little downward pressure with Ford, okay? I would not be surprised if we start approaching that 78 fib line and testing that $23.50 area. That is where I think we're going to probably end up by the end of this week, testing that area, which is good for us because we got puts on it that expire at the end of the week, and we need to make some money somehow in this market. GM, another play that we got puts on. This one's definitely more bearish than Ford. I think we hit that 50% fib line either tomorrow or the next day. And even with Super Trend using that, you see that big fat sell arrow, definitely got some selling pressure moving in on GM. I think this goes down. Hopefully we start approaching that $57 area, because that is where our put is set and we need to make some money on this play. And if you wonder why we started seeing the banks just crumble, especially after such a bullish week last week, Goldman Sachs missed earnings, and look at that, man. Big sell, big dump. This is what spiraled a lot of those banking industries to sell off, and a lot of people got some downward pressure movement and a lot of stocks that were expected to do fairly well moving into earnings season. Goldman Sachs just led the pack and everything just followed down with it. Bank of America tumbled. We got calls on this particular trade and definitely did not do well for us today. I'm hoping for a rebound. We're at that 50% fib line. I'm hoping we bounce. I'm hoping we start to approach back up into the 60 and into that 78% area, but only time will tell. And if I had to bet on this, I'm thinking that BAC and financial industries this particular week are going to do fairly hard to rebound from Goldman Sachs taking such a dive. Wells Fargo even had a tough time, and Wells Fargo was booming last week, which we had puts on it before, and we had some calls, but we got a call on it this particular week. We got inside bar, so we got some options. We got some momentum going in. Hopefully we see a rebound tomorrow, especially in this trade, because this thing could definitely skyrocket with the right amount of volume to the buy side coming in. But again, the financial industry is not looking so good right now, and definitely worrisome to finish off the week strong. So we're definitely paying attention to Wells Fargo, Bank of America, and Goldman Sachs, and JPM. Microsoft, man. Microsoft actually had some great news, but anytime a big juggernaut company spends a lot of money to acquire something, you're going to see some sell-off, okay? Now, by the way that the sell-off looks like, I don't think that we're going to see much more downward pressure from here. We're definitely at the bottom. That's at the 0% fib line. I think we bounce from here, and especially with future forward thinking people in Microsoft, you got to tuck your money somewhere. Microsoft is one of those safe bets to tuck your money in, and I think this is an attractive price where it's at currently at $301, $302. I think people are going to start throwing in those automatic orders, and we're going to see some buying pressure. So with everything selling out, options in a bear market, where do we take our money and what kind of options do we have? Well, I want to share some inverse indexes with you, okay, that you need to pay attention, because it can not just give you a financial edge if you invest in them, but you can also watch them to see the trend and see if you start to see some things which could give you a clue that we're either headed into more of a bearish market or we might be looking to reverse into a little bull run. First one you got is SQQQ, okay? Pay attention. This is the inverse ETF, and definitely you can see that even in a bloody market like today, this thing finished closing high. Because why? Well, if in a complete bear market, this thing is bullish, okay? It's an inverse ETF. You got to pay attention to this, okay? Now, if we continue to go up, that means on this particular stock, that means that the stock market as a whole is coming down. If we start to trend down on this particular ticker, that means the market's starting to rebound a little bit. Another one, very similar to the last one we just, kind of like SPY and VOO, right? These are the SPY and VOO of the inverse ETF. So we're definitely paying attention to SQQQ and SDS, especially now that we're in a bearish type of trend. We want to be able to make money both ways, and these inverse ETFs are definitely options for us to make money on the decline. Last one, SOXS. And if you notice this thing, we were kind of in like, a downward swoop coming in. The market was doing fairly well, and now we're consolidating a little bit, and we're starting to travel up in this particular ticker. This is telling us that the market as a whole is starting to decline. So we're paying attention to these three inverse ETFs and stocks, as they can give us an idea of the direction that the market's going. All right, and we're about to wrap up the video. And before we go, I want to talk about TWR's principles for success. And specifically today, we're going to talk about managing, and not just managing our portfolios or managing our monies or managing our stocks, managing our risk tolerance and managing our emotional trading, okay? Especially in markets like today, these test patience, these test discipline, these test your emotional ties to your investments that you have, because we're human, it's our money, it's important to us, and we definitely hate to see things just continue to bottom out. So ideas on how to manage, right? All right, number one, we want to follow big money, okay? Follow where the money's going, okay? The institutional money, the big buys, where's the money rotating? Is it coming out of growth and going into value? Well, we want to start tracking into those directions, right? Next, going further out with positions, okay? Whether you're in a call or a put or an option or, equities or derivatives or whatever you want to call it, okay? Going further out with our mindset on our particular trading style, all right? And next, use the inverse indexes that we just talked about to make money on sell-offs, okay? These are ways that we can manage, and they also kind of keep us in line with our particular emotional ties to selling and trading and things of this nature. Now, I do want to hit this one huge step, okay? You do not have to trade every day, okay? Cash on hand is still a position. If you're not feeling it, don't get into the market, man. You'll probably, more than likely, make a mistake and you'll regret it in the end. All right, guys. And before we go, we got our next class set for this Saturday. Trade your personality, all right? Now, I got all the different emojis, the life cycle of a trader, okay? Confident, cocky, crying, mad, pissed off, puking up money, making money, all that stuff, man. We're going to talk about, okay, different strokes for different folks. What type of trader are you? Now, we're going to go in details in the class, but I want you guys to think about that, okay? What type of trader are you? Are you a day trader, swing trader, long position? Or if you're a day trader and you're not making money consistently, maybe you're not a day trader because your personality isn't into it. Maybe another trading style is better suited for you. And we're going to talk about that, and we're going to create new plans and strategies moving forward. So I hope to see you guys there. Check the description. The link is there. Come join us on Saturday for this particular class. All right, team, and that's it, man. That's the video. I hope you got some value and some worth out of the video. Remember, Traders War Room, we're looking at the stock market like a war zone. Stocks and sectors are all battles. We're going to war every day as a team, as a community. And if that sounds good, then I want every single one of you to come along with us in that journey. And as always, if you're ready to rock with us, follow me and let's go to war together.